Welcome back to Everything Money. In today's video, you will learn how we look at the Visa and Visa stock. We'll take a look at their financials, heavily requested. We'll use our software to show you the numbers and how we invest. We'll use our stock analyzer tool to show you what you should be paying for Visa moving forward. And if you want to trade this, we'll head over to Mo and he'll show us the charts about all the trends and charts about trading. But first, why should you watch this video? I bring your questions about Visa to a couple guys that own and operate multiple businesses, real estate, and stocks, and they'll give us a mindset about looking at a company like Visa. Paul, what do you think? We haven't done this company in a while. What do you think?
Thank you, Seth. Guys, everybody follow us on Everything Money Investing on Instagram, and also follow our personal accounts because you get to see fun things about it. I don't post anything basically about Everything Money. I keep it all personal. So Visa is obviously probably the biggest processor in the world, I would guess. I don't have to look it up. I did some research ahead of time on Visa, and there wasn't really much in the news about it. So let's go to our Everything Money tools. And I don't know if I just missed something about it. There wasn't anything that really stood out to me. So I'm going to the news section. Is it safe to buy Visa stock? 4 Cyber Monday deal. I didn't see any reports of earnings. Oh, right here. Since the last earnings report. I look at Visa as when Warren Buffett talks about a moat. I mean, if I said to you right now, name me a credit card, what are you going to say?
Yeah, they've done a great job. They're in all the movies, have been for 30 years. I mean, MasterCard is out there. American Express is for weirdos. Yes. But Paul, this is so heavily requested on our community, Instagram messages. Everyone wants to see Visa.
Okay, let's start. There's some interesting things on Visa.
Go ahead.
First off, $430 billion market cap. I was surprised how big this company was.
Jeez, 430.
Yeah, $430 billion. Here's one thing that's interesting to me. Most companies' gross margins are 30 to 60%. This company's bottom line profit margin is 51%. That means their bottom line after paying all overhead, everything out there, including taxes, they make 51% of their money. That's an incredible number. So pillar number 1, we want the 5-year PE to be under 22.5, okay? Right now, it's 41, so it's a little bit expensive. So that's an X. Pillar number 2, we want the 5-year return on invested capital greater than 9%.
This has to be great, right?
Yes, it's 16.8%, which means they get a lot of return, cash flow on the money invested in the business through debt and equity. So that's a check mark. So we have 1 X and 1 check.
Look at this adorable dividend, Paul.
It is an adorable dividend. 0.7%, pays out $2.8 billion. And like your Uncle Paul always tells you, you got to compare that dividend to the free cash flow because everyone thinks dividends are safe, but you got to compare it to free. Some people compare it to earnings. I still go to free cash flow. $2.8 billion. Their 5-year average is $11.4 billion, and last year they did $14.5.
Plenty.
So plenty of cash on hand to pay that dividend. It's a little over 20% of their 5-year average. So we're all good there. So far, 1X, 1 check.
Pillar number 3 is revenue growth over the past 5 years. I'm sure they're growing. I mean, what could stop this juggernaut, Paul?
Okay, so we go to the income statement on our exclusive Everything Money software. Scroll down a little bit just so we can get it in the screen. 5 years ago, $22 billion. Last year, $30.8. Check mark there.
And tripled in the last decade.
Well, they did an acquisition somewhere around here, I believe. But yes, they have almost tripled in the last decade. Not bad. Pillar number 4, net income, also known as profit growth in the last 5 years. So we go to the net income line, $6.7 billion to $12.3. Look at their profit 10 years ago, 2.1. So they're up almost 6 times in the last 10 years in profit. So I think we'd all be happy with that one. Another check there. Pillar number 5, shares outstanding. Guys, you're going to hear me preach this to the day I die. Shares outstanding is a silent killer of stocks. If they're increasing their shares, they're diluting you as an owner. You keep the same number of shares, but you own less and less of the company, and the exact opposite happens. Now, granted, the exact opposite happens when they're buying shares back. Now, remember, issuing shares and buying shares back aren't always good or bad. It all depends. This company seems a little expensive, so if they're issuing shares, I understand that. But if they're buying back shares when they're expensive, that's not a good thing. So we scroll on to the bottom. 5 years ago, $2.27 billion, now $2.18. That's a check mark. But they're barely down in their shares outstanding. So it doesn't bother me as much. But look at 10 years ago, Seth.
Oh, they're way down.
They're
way down.
Up from last year.
3.2.
They are up a little bit from last year. And I wonder if that has to do with how expensive the stock is. But Mo, do you see this? They're down 33% in their shares outstanding in the last 10 years.
Yeah, it's really good.
That's incredible. Another check mark. Pillar number 6.
Their debt.
their debt. Now, what do we think about debt, Seth?
Well, we want to make sure that a company can survive some sort of recession. I love when the analogy you bring up is like if myself and my neighbor, we're sort of the same people, have the same house, same cars, same families, but if he has $1 million of debt and I don't, and something chaotic happens, I'll most likely survive. But I can't imagine Visa has a ton of debt, right? What the hell are they even doing? Is Visa like 4 people in a room just processing all this stuff? I mean, how many people does it take?
4 people from Upwork that they found.
I was going to say, I was going to say, it's like our editing
Bangladesh.
process. Yeah,
it's like $8 an hour.
I was going to say, how many people does it take to do this? I mean, with overhead, I mean, what is it? Computers?
Yeah, I don't think so. What we do here, guys, we go back to the main page of our exclusive software. We go to the 5-year average free cash flow, $11.4 billion. We multiply it by 5. That is $57 billion. So we want their total long-term liabilities to be under $57 billion, right? As Seth said, guys, a good company will be able, especially with a high return on invested capital, they don't need debt in order to make a lot of money and do well. So we scroll up to the top. We go to the balance sheet. We scroll all the way bottom of the balance sheet. Total long-term liability is $29.6 billion. Yeah! And we want it to be under 57. So it's almost half. So check mark there.
Paul, they process 65,000 transactions
per second.
Yeah. You knew that.
I knew it second after you say it.
I thought you were going to say per minute.
No, I knew it was like, because guys, think about Amazon.
Yeah.
Oh, you're right.
I mean, just think about Amazon, how many transactions are occurring.
Yeah.
And they're all getting paid with Visas.
And I mean, so we have Dynasty Owner, right? So Dynasty Owner is DynastyOwner.com is our fantasy football startup. Check it out, DynastyOwner.com. It's awesome. I checked the transactions because I liked Discover Financial a year ago. The financials of it, I wanted to buy some stock. But I would go search for Discover Financial. It was like 5% of the transactions. Everything is Visa. Mm-hmm. Everything is Visa. I mean, it's Visa, MasterCard, American Express, but in that order. But the Visa is the vast majority of it. Vast majority of it. I have 3 credit cards in my wallet. All 3 are Visa now.
So for you at home, though, as much as this sounds rosy, it's not what you buy, it's what you pay for it.
Correct.
And so we want to transfer how great this company is into what the stock price is, Paul. Keep going. Pillar number 7, Paul.
So the big mamma jamma, exclusive software cash flow statement. Guys, free cash flow is cash from operations less your capital expenditures. You can use that free cash flow to do one of 5 things. Buy back shares, pay dividend, pay down debt, make acquisitions, reinvest back in yourself, okay? These are the 5 main things. Now, can you buy Beanie Babies? Sure. Can you buy luxury sports cars? Sure. But in terms of a company, these are the 5 things you can do. Well, Seth buys Beanie Babies.
How dare you?
At least buy Magic cards. Sorry, I got Beanie Babies and Magic cards mixed up.
Huge difference, Paul. You know this if you're watching. Go ahead.
Okay.
Go ahead, Paul.
So, cash for operations less your capital expenditures.
Beanie Babies.
Now, we're the cash flow statement. I added this line to the cash flow statement to make it easy for you.
In your grand wisdom.
In my grand wisdom. 5 years ago, they did $8.6 billion. Last year, $14.5. Check mark there. 10 years ago, they did 4.6. I mean, so they're growth. I mean, this is big growth in the last 10 years. All right. So our final metric, our final pillar, we take the 5-year average free cash flow, we multiply by 20 to give us some idea of a price to pay. Now, remember, this isn't set in stone. The price you should pay, the multiple you should pay depends on growth rate. If the company was losing 5% a year revenue, you'd want to pay like a very, very low multiple, well into the single digits. But if it's growing 30% a year for the next 10 years, you want to pay a much higher multiple. But we start at 20. So 11.4 times 20 equals $228 billion.
Yeah, boy.
Versus
actual retail price is $430 billion is the market cap.
So that's a big X, guys. It's almost half. Now, it makes sense, though. What was their 5-year PE? It was like 40.
40, yeah.
And we won under 22.5. So it kind of makes sense.
So I think folks, Paul, I think folks have seen this recent decline, just in a couple months.
And it gets exciting. By the way, one of the greatest ways to find value is go for the companies that are hitting 52-week lows and dropping big time.
Wow, Paul, 250 back in July, and now it's 190.
Yeah, 196, right?
Yep.
190.
Crazy.
So guys, to make it easy on you, there's an 8-pillar tab right here in our exclusive software. You click it, and praise the Lord, look at this.
Boom.
The only 2, this is a very common theme amongst companies we like. So my personal opinion on Visa, we're going to use a stock analyzer tool next to figure out exactly what we should pay for the company. But my thing on Visa is I'm going to add this to my watch list. Watch list coming soon to our exclusive software because everything I like except for the valuation. And that seems to be a very common occurrence in this market.
Yes.
valuation drives everything in the long run, right?
I get all fired up by seeing all these green checks, but then I realize it's just too
This is my
expensive.
favorite thing to see.
Yes.
This is my favorite thing to see because knowing Visa as a very big company, these are probably not going to change much no matter what the market does. But remember, Visa is driven by consumer spending. Consumer spending accounts for 70% of GDP. So any recession that hits is going to be driven by consumer spending. But they have all this great margin in here to withstand that. Guys, their average free cash flow in the last 5 years is $11 billion, but last year they did $14 billion, and their total long-term liabilities was $28. If they just continue last year's free cash flow, they can pay off all their long-term liabilities in just 2 years. This company ain't going anywhere. This is a safe company. This is a company that I would argue you should pay a premium for. But let's go to the Stock Analyzer tool, the most famous part of our software now.
Infamous.
People love it. They go, Paul, you are the smartest man alive. I go, thank you.
I thought they were saying Seth.
They do. They just misspelled Paul.
Go on.
They misspelled Seth, I mean. So guys, Stock Analyzer tool will tell you exactly what you need to pay because every investment is the present value of all future cash flows. And those future cash flows, we have no idea what they are. Why? Because it's the future. You watching out there today couldn't even guess what you're going to have for dinner tonight. Correct? So how do you know what's going to happen in the next 10 years? Well, what I like to do is I like to look at history and use that as a determinant for the future. So, Stock Analyzer tool. First things first, number of years of analysis. If Visa is not in business in 10 years, I'm quite sure whoever has the most guns is going to win. Because if Visa's not in business in 10 years,
Something has happened.
something really, really bad has probably happened.
Go on.
Okay, we do 3 assumptions. Now our Stock Analyzer tool will give you the 1, 5, 10-year numbers. So I like to pick my goal is to pick conservative assumptions, and I'm going to talk to my good friend Mo here, who's going to make some of these assumptions for me. So Mo, give me a low, middle, and high assumption for revenue growth for the next 10 years, considering it's driven largely by consumer spending.
Oh, 5, 6, and 7, because
Okay.
I do think consumer spending will.
Taper off.
Yeah, I mean, maybe not for the whole decade, but
And the other thing is we still want to be conservative. The goal is to still be conservative. So I like those numbers. Okay, what about profit margin?
I would have to say it would stay around the 45% number. So 40. Do you think it would go up?
I don't know. I don't have a reason why it would go up.
Yeah. Okay, then put 45 on the high side.
Okay,
44 and 43.
I agree. Okay, what about free cash flow margin?
Look at that
Wow.
free cash. 60,
Maybe
52,
put 48 on the high
47.
side. 47, 46. I mean,
Now, Mo is combining 3 conservative measures, making this ultra conservative assumptions?
that's a
Good
good
question,
question.
Mo.
That is a good question.
What do you
Well,
think?
see, that's what when I do like my high assumption, I typically like to go high just to get maybe a ridiculous number up there instead of running the thing again and doing all my assumptions over
And I
again.
think that's the point of the Stock Analyzer tool.
Yeah,
The point of the
that's-
Stock Analyzer tool is your low number should be a pretty conservative number. Your middle one should be probably what you think it's going to do, and high should be, hey, listen, if they hit everything
they
out of the
crush
park,
it.
they
Yeah.
crush it. This is what it's going to be.
I mean, you could like if you wanted to, we could change revenue growth and put it at 9%, and profit margin I think is probably
Let's do that. Let's do
consistent.
5, 7, 9. Profit margin, let's do 45, 47, and 49.
Yeah, what about for free cash? What about
Free cash
45,
flow?
50, and 55?
I don't think 50. I think 55 is still a little high. I think 45, 48, and 51 might be reasonable.
Okay.
'Cause I think last year drove. Last year was big numbers, so that's going to really affect the 5-year number.
I see.
So what about PE, Mo? This is where people are going to give us flack.
Yeah. I'm almost inclined to go 14, 16, 18.
I love it.
Just because of the moat they have.
I
kinda.
love it. And the reason being, guys, this is a big company. The growth. I mean, tell me where Visa is not accepted. I'll wait.
Well, I think you're right, Paul. The argument
tell you
is
somewhere.
they are growing, but you're projecting out the next decade, which could be drastically different than the last, of course. So
Correct. And plus, the last 10 years have had massive economic. Well, not massive economic growth. Mo, where is Visa not accepted?
Amazon in the UK.
What?
Yeah. So a part of their big fall, well, the chart's not here. A part of their big fall in the last 2 weeks has been that Amazon said that they're no longer accepting Visa
how is that possible?
because the fees structured. So there's going to be some kind of negotiation between the two.
Wow.
Because the fees. Yep.
All right. What about price of free cash flow, Mo?
I would probably just put it the same,
I agree with you.
and then the return of 12.5% across the board.
And 12.5%, guys, if you do an ETF over long periods of time, you'll get 9 to 10%. So to buy an individual company and allow yourself some margin of safety, I always go 12.5%. Because remember, the higher return, the lower the price you pay. We hit the analyze button.
What's going on here?
Boom.
Okay, so the price
We have a low of 70, a high of 120, and a middle area of 90.
Don't be confused. This is not what we think the stock should be right now. Tell them, Paul.
This is where I believe if you're looking at the middle, to me, I'm looking in this area to buy it. Because remember, I'm a value investor. I want to buy $1 for less than $1. I don't want to buy $1 for $1. We put a little margin of safety in here for 12.5%, and we want to be conservative. Does this sound like it's a big drop? Of course it does. But if you look at the metrics, the PE, the 5-year PE was 40-some, and we want to be under 22. So it has to fall in half. Take 196 divided by 2. What are you at? $98. That seems pretty much in line with the middle range.
It was there 4 years ago, Paul.
And it probably, by the way, and it took, in 4 years ago, in the last 5-6 years, the market has just been insane.
Yes.
So this actually all adds up properly. I'm not looking at going, crap, how do I explain this? I look at this going, all right, makes sense.
Yeah.
This makes sense to me.
If this makes sense to you and looking at these numbers finally resonates with, oh, this is how I could look at a company like Visa and invest. Paul, tell them how they can get this software behind you.
So guys, we created the software because our subscribers, people who watched our videos said, hey, how do we analyze companies without waiting for you to make a video on it? So we said, great, let's make the software. We spent hundreds of thousands, created everything you see here. You get everything you see here. You get it all on your mobile phone. You get 30 years of financial data. You get access to Seth Moe and I. You get the whole 8-pillar analysis, stock analyzer tool. You even get real estate calculator and everything on this main page that is coming soon. You'll see right here, everything coming soon here on the right. You even get the portfolios. You can put up to 50 stocks in a portfolio. It'll tell you how they look all together. You get exclusive daily content. That's 2 or 3 videos a day from Seth Moe and I, only for our users who buy the software. But most importantly, you get access to our chat. There are over 6,000 people who pay for the software right now. You can discuss all your ideas with them. If you have comments on Visa, I guarantee you there are dozens of people who are looking at Visa as well. You get all of this for only 90 cents per day. Guys, less than a cup of coffee, 90 cents a day, you get all of this. And the best part is you get this at the same price forever. Your price doesn't go up as our price goes up with it. You only get increases for inflation. You get all of this, 90 cents a day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of going directly to everythingmoney.com is we are not large enough yet to charge a sales tax, so you'll save that for the time being. 90 cents a day if you just increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year. It could lead to hundreds of thousands, if not millions. 90 cents a day. Go sign up now.
Great, Paulie Bear. I love you. Mo, if you want to trade this, what are people doing with Visa? Again, so requested in our community. What's going on? Look at that chart. Good Lord.
So I'm zoomed out about 2 years, and if you just go like this and get rid of this, that little blip, and get rid of COVID, you've really just, with the exception of those couple, maybe 2 months, you've really stayed in this consolidation area. So what that tells me is you're going to stay in this area for quite some time, and you're at the bottom of it. So why not try to catch, why not maybe, what is this, $200? I don't know, put this on a really tight watch list, wait till this thing moves into the sweet spot and catch it and try to run it up to this line right here around 225. This is a no-brainer for me. I just noticed that when I zoomed out on the chart. These things tend to stay in consolidation channels. I don't think that you're going to drop lower because you're at this support level where you have a lot of consolidation there, some right here. Outside of COVID, it really doesn't drop below where it's at right now. So unless everything falls apart, like Paul was saying, that's probably what I would do. Throw it on a watch list, a very tight watch list, unless you want to buy a $200 tracker share, and go from there. Now, if you don't want to do that and you want to do it more in a near term, come over here to the swing trading daily chart. You're below 4 major moving averages. So that means that you have freedom to run up to those moving averages. Let this thing move into the sweet spot, run it up to this 206.25 number, make a little bit of change there. So there's multiple ways that you can do this. And a day trading side is not a great stock to day trade because it doesn't move that much on a day-to-day basis over a long period of time. So if you want to learn these rules, come and join me. You'll get access to the Trading 101 series, which is all the rules for you to be a successful trader. You get the Employed Trader series, which is 6 stocks that we play long-term and short-term that you can make money on, and you follow me on a daily basis. Exclusive monthly seminars. I am doing one, well, I shouldn't say that, should I?
That's okay. You do them every few weeks, right?
Okay. Yeah, I do exclusive monthly seminars. We have one this coming Saturday, but We can, you get access to me for a full hour and a half, ask all the questions you want in a very private setting, and the Bid and Ask Discord community of 900 plus people come and join me.
Yeah, someone asked me on Instagram, like, what is in the business? What do I get? If I don't have time to monitor where Visa's heading through, there's discussions about this stock up and down.
Tons of discussions, guys. I think there's 16 or 17 chats that it's broken down into, so you're not just getting swallowed up in one chat with 900 people. It's broken down. If you want to swing trade Visa, you go in the swing trading chat. If you want to do long-term, you go in the long-term chat. If you want to value play it, there's a value play chat. Options chat. Whatever you want to do, there's somewhere that you can go and talk about Visa.
In the end, we're trying to provide a process for you. If you have a financial planner, you can look at your statement. He might have bought Visa. In the end, you can gain control of your wealth, and you can buy Visa for yourself. It's quite simple. Go to Fidelity or Charles Schwab and do it. So learn from us, watch more videos, and you'll learn this language we're trying to tell you. So that's our take on Visa. A little expensive at the moment, but we'll keep it on a watch list. Fondle a thumbs up on the way out. Thanks for watching. We'll see you next video.